US and European equity markets were mixed overnight. US markets were up initially after the news came out of China that international trade has surged through December. Remember, China has effectively pulled the global economy out of the doldrums over the past 12 months, so any positive news coming out of that region is good for the global economy. However, later in the day, it was revealed that Venezuela have devalued their currency, the bolivar. Several large American multinationals have large cash piles in Venezuela, and so these have effectively devalued overnight. This will have an effect on their earnings profile. For the New Zealand dollar, we have increased overnight, and currently we are trading at 74.20 against the US dollar on Tuesday morning. Through 2010, we should see the New Zealand economy further stabilise. After coming out of recession in the middle part of 2009, we have seen 2 quarters of fairly minor economic growth rates. In fact, some industries are still going backwards at this present time. Ideally, New Zealand would have come out of this recession via an export-led recovery, which would have been good for us over the longer term. However, it has mainly been household-led, mainly coming from increases in housing prices. Construction should be positive through this year. All up, 2010 should be fairly positive for the New Zealand economy. However, growth will be moderate rather than sharp over this year. All the talk seems to be that New Zealand lamb has sold pretty well in our overseas markets through the Christmas period. This is positive on the demand side of the price equation. However, supply and slaughter levels are well back here in New Zealand for this time of the season. This has meant that there will likely be a large amount of supply coming through meat companies over the next month or two. This is likely to put some price pressure on scheduled prices for this earlier part of the season. The pound has also been decreasing against the New Zealand dollar, and we are once again trading close to 46p against the UK pound. All up, this is likely to mean that we see further downwards pressure on lamb scheduled prices for this season.